A warm welcome to our webinar today, which is about the impact divorce has on our lives from a personal and a financial perspective. We will be focusing on the needs of people who are starting the journey through divorce and those who have come out of the other side and are planning for the next phase. I'm Rebecca Aldridge, and I'll be talking through today's webinar live, but first I'd like to play this short recorded introduction. Hello, I'm Rebecca Aldridge and I'm a chartered financial planner. I work with a wide range of people, and it's very common for someone to come to me when they're approaching a significant change in their lives. Of course, divorce is one of the greatest changes that we can experience. I've helped many women and men prepare and then come to terms with their new situations. That includes understanding who they want to be, getting to grips with their new financial situation, and understanding what's possible. I'm the founder of Balanced Wealth Planning. We're based in Nottingham, and we have a whole team of people dedicated to giving financial planning advice, using our skills and experience to build plans that allow you to have the lifestyle you want to lead. So let's get started. The subject of divorce, your finances and life planning is a really big one, and we're going to cover as much as we can in the next hour. No matter what stage you're at in your divorce journey, there'll be something for you to take away. We'll be working chronologically and thinking firstly about starting the divorce journey, including addressing your emotional frame of mind and understanding what to expect from a divorce. We will then think about how assets are shared on divorce, whether some assets are more appropriate to share than others, and why you need to think about tax. To surveying your new situation, where we'll cover understanding your new position and planning for immediate changes you need to make, finding out what lifestyle is possible and what isn't, how long you might need to work, and how much you might need to earn to live comfortably. We'll be encouraging you to think deeply about the person you want to be now. And finally, we'll think about how to protect yourself and others. Regardless of whether you're receiving a settlement or parting with some of your assets, we'll be thinking about how to protect and build on what you will walk away with. We'll also be touching on a whole lot of other practical things to do, like updating your wills, life insurances and pensions, among other things. Finally, you'll notice that you have the option to send questions to me throughout the session. Please put them in the chat box and I'll address them at the end. If you have a question that you'd prefer to remain private, you can mark that on the chat. Otherwise, you are welcome to contact me directly after the webinar by email. You won't just be hearing from me. I've curated a whole collection of interviews from some other professionals who have been kind enough to share their expertise. We'll be hearing from Kari Mellon from Opes Tax, who is a personal tax planning expert, Nikki Aston, who is a family lawyer at Shakespeare Martineau, and also Helen from Tallents, another family lawyer. Let's start at the beginning, when you first start the divorce process. And it's worth explaining early on that when I refer to divorce, I'm talking about your legal separation after having been in either a marriage or civil partnership, whether that's the same or mixed sex. Religious or informal marriages don't have the same treatment, rights, or process. You will almost certainly start your divorce process by talking to a lawyer. You might have had a recommendation from friends who've been through the experience, or you may need to find someone yourself. Either way, I suggest you talk to at least 2 people before you decide who to appoint. Don't feel rushed into it. Your decision needs to be right for you. They will be taking you through a legal procedure which can be complex, confusing, and frustrating, so you need to feel confident that they know what they're talking about and that you understand what they're saying. You are also going to need to be completely and utterly honest with your lawyer about your relationship, your finances, your state of mental well-being, and more. So you must like them and feel you can completely trust them. This is going to be an emotionally challenging time. You will feel angry, frustrated, upset, and a whole range of other emotions. Perhaps jealous and bitter, perhaps relieved and positive. You will inevitably bring some of that to your discussions with your lawyer, but it's important to know your boundaries. Your lawyer is there to secure you a fair settlement. While they will listen to you and they will care about how you feel, ultimately, they are not counsellors. Another professional you may get involved with is a mediator. And the first thing your lawyer will do is to find out whether mediation is possible. Through mediation, couples can discuss their situation and try and come to a rough decision or framework together before lawyers are instructed to make that decision formal. If you're not on speaking terms, that's not going to work, and you will skip straight to communications through your lawyers. I want to introduce you to the first of our family lawyers, Helen Shaw. I asked her what happens in a first meeting with someone starting the divorce process.
I'm Helen Shaw. I'm a solicitor. I work at Tallents in Mansfield. I specialise in all things to do with relationships, usually relationship breakdown, and that's marriages and cohabitation. And I also deal with prenuptial and cohabitation agreements. So normally when we have the first meeting with a client, we send them a questionnaire. So they have time to prepare the basic information, names, addresses, date of marriage, and outline details about their income, their assets and their pensions. Some people are very vulnerable because they don't know very much about their partner's assets or their income, and they have no idea about how the law will treat them when they separate, which can be very confusing, very distressing for them. And I think that's probably one of the most rewarding parts of my job, to guide someone through that process, to make sure that they are able to find out the information that they need, or we help them find that information, and to make sure that they achieve a fair settlement. The first thing that we have to do in every case is to work out the process, and there are different ways of exchanging the information and getting to the stage where we can negotiate a settlement. We can either do that through solicitors, and we have a fairly formal process, or we can send both parties off to a family mediator, where the same process happens. They exchange the information, but they do that face-to-face in a mediation meeting. And then once they've done the mediation sessions, they come back to us, often with a full agreement about what should happen next, sometimes with a pathway that they want to follow, but not a full agreement. And then we put into practice the agreement that they've reached in mediation. But the first step in every case is to exchange the financial disclosure, and that means details of all the income, the assets, the liabilities, and the value of the pensions, so that we can work out how these things can be split and what's fair. Where we can't do that by agreement between solicitors, then it's open to either party to make an application to the court, and the court will guide you through the process of financial disclosure, negotiation, and then ultimately make a decision if you can't agree.
Really useful information there from Helen. So quite a lot to take in, and whatever the process, you will need to provide a full breakdown of what you believe the assets are that are owned by you and your ex-partner. Everything is included. They will also want to know your income now and how that might change in the future, as well as a full breakdown of your spending budget. You should be well prepared for this. Go through your paperwork and bank statements to pull together all the information you're going to need. By the way, anyone hoping to dispose of or to try and hide assets before divorce proceedings start to protect them is usually not going to succeed. It prolongs the process and increases costs, and ultimately you can get in a lot of trouble and even face a prison sentence. Movements of assets will usually be picked up by reviewing bank statements or company accounts, and a court can instruct them to be reversed if necessary. Now, I'm aware that for some people it will be easy to turn to your records and to pull out the data about your finances, because you are the person in your relationship who takes the key role in managing the money. But as Helen said in her video, for many people, they just don't have that information because it's simply not been their role to take care of it. It's useful to pause at this point and acknowledge this. We know for many people the process of what lawyers call financial disclosure can be quite a challenge on its own. If that applies to you, I would urge you to speak to those around you that can help. If you have a financial planner or an accountant, they can really take the strain here. A friend or a family member who's more au fait with financial matters will be able to lend a hand too. Create a circle of friendly or professional support around you to help make sure you understand everything and are treated fairly. I'd like to introduce you now to Nikki Aston. She's the second of our lawyers contributing today. I asked her about how long it takes to go through the process of divorce and agreeing your financial settlement, as well as what you can expect to pay in professional fees for expert advice.
I'm Nikki Aston, and I'm a family associate at Shakespeare Martineau. I deal with mid to high net worth clients, finances, children, and all the other facets of family law.
How long would you suggest somebody should expect it to take from beginning to end?
At least a year. The days of 6 months of divorce are gone. The courts are so overworked. Everything is backlogged. Even a simple consent order is taking months to come back. So a really big piece of advice, if people are thinking, I'm going to start a divorce in a few months, start it now, because it takes so long, and it's just not worth waiting, because it's just going to drag and drag. It's not going to get any better anytime soon.
And the emotional turmoil of going through all that as well. I mean, it's draining.
Yeah, absolutely.
When somebody wants to work with a lawyer, they have to choose somebody that they like, that they trust. How much realistically does somebody need to pay to have a good lawyer work with them?
Well, that's a difficult question, isn't it? Because good and cost and value is so subjective to people. And obviously there's such a range of different services you can get from high street, top end firms or somewhere in the middle. What I think is massively important is that you have a rapport with your solicitor. You've got to feel like you're on your side. You don't want someone sitting behind your desk who is one-dimensional, who is just going to go through the motions, because that's not what we're here for. Well, I'm not anyway. You know, a huge part of it too is somebody who's a member of Resolution, which is a national organisation of lawyers who have a code of conduct. They deal with things in a non-inflammatory, conciliatory way. I'm a huge champion for that, because the ability to know your opponent, pick up the phone, have an off-the-record chat can save so much money rather than endless letters, because we want to settle it, we want to get a good result. And I think in terms of value, how much is it going to cost? I mean, you have your standard court fees, solicitors will give you estimates. It's usually around £1,200 for a divorce plus VAT, including the court fee of £550. That's the sort of range for a divorce locally. As for finances, it just depends what's involved, because it depends on how awkward the other person's going to be. Are they going to provide disclosure? Are we applying to court? So many different factors. And anything more than a house, a pension and some savings is complex. If you've got extra property, you've got capital gains tax implications, pension sharing orders, investments, pre-marriage inheritance, trusts, anything like that. That's complex work and needs to be done properly by specialists who know what they're doing.
During the process of getting divorced, you will have times of feeling emotionally drained, angry and worried, and that's just the beginning. Whether you instigated the divorce or not, many people find the whole episode extremely difficult to get through, and you might want to talk to a counsellor or a divorce coach to help you. Divorce does not bring out the best in anyone, unfortunately. If you feel that would be useful, find someone who specialises in counselling through divorce and book in a handful of sessions. You need to feel able to think straight and have a clear head in order to make sound decisions. Very often when I work with someone who's been through an experience like divorce, they say to me, perhaps a year or so later, you know what? I don't really remember who I was then. I remember listening to you and making decisions, but a big part of me wasn't really in the room and I didn't feel like myself. So how do you deal with that? These are my tips. If you can, have someone with you throughout most of your divorce discussions. A best friend, a family member perhaps. They will be able to absorb more information and give you a second chance to talk things through afterwards. They can read the emails you receive and guide you. This is not about not being good enough yourself. You're just thinking of them as an essential co-pilot. Make notes. Write everything down. On your phone, in a paper notebook, it doesn't matter. When you're distracted, as you will be, you'll usually find it quite difficult to concentrate and remember everything, so get it written down. Also, I suggest breaking tasks up into smaller pieces. If your lawyer has sent you a pile of things to do or questions to answer, don't look at the mountain. Just look at each individual step. Tackle 1 or 2 things at a time. Also, allow yourself to check in with how you're feeling regularly and be prepared to say, I'm at my limit now. I'll come back to this later. I met with a lady online recently who was currently having trouble concentrating and absorbing information. At the start of our conversation, I invited her to tell me when she felt she'd had enough. After an hour, she said that she could sense she was getting overwhelmed. So what did we do? Well, we stopped, scheduling the second half of the conversation for another day. I was okay with that. She was okay with that. It was best for everyone. The final point here is about where you direct your energy. It's tempting, and it certainly feeds our inner animal brain, to direct our anger, worry and frustrations at other people, including your ex and his or her lawyer. But what are you actually trying to achieve? For most people, you just want to draw a line under things. Wrap up that chapter of your life and start a new one. There is an end point, and it's vital to keep that end in mind. Doing that will help you see the bigger picture and to rise above some of the distracting noise. Here's what Nikki had to say about the whole process from an emotional point of view.
Do you have any advice for people from an emotional point of view of how they get through this time? Because, I mean, clearly you're a lawyer, you deal with the legal aspect, but you must be faced with people who are upset, angry, frustrated.
Communication is really, really important. And I think I always say to my client that I want you to feel like you've come out of this and survived and having some control over it. And I think it's really preserving the client's emotional journey through it all, because being a family lawyer is such a human job, believe it or not. I feel really passionate about that because, you know, I meet some really, really nice people and it's just horrendous for some of them. And I guess I try and make that as easy as I can with the sort of tools that I've got, really. But it's not easy, and what I would say is people can contemplating divorce proceedings, take a deep breath, do it. It will get worse before it gets better. But people who say to me on the other side, wow, if you know, this time last year I was at rock bottom, now I'm out of it, it's finished, I can move on, and that's really, really, you know, reassuring for me. You think, you know, you do get there in the end.
While getting a divorce ends the marriage contract, it doesn't finalise the financial aspects of your relationship. This is done by negotiating a divorce settlement between the two of you and applying for a consent order with the court. A consent order is a legally binding document which explains how all your assets will be shared between you, and it will include a specific pension sharing order if that's appropriate. It might also include details of any spousal maintenance or child maintenance payments. For many couples, this consent order will represent a clean break between you, either straight away or after a period of paying maintenance payments. What you might not know is that if you don't have a clean break order, your ex-spouse might still be entitled to make another claim at a later date. As an extreme example, if you sell your business, win the lottery, or get a better job, they can come back and apply for a share of that extra wealth. So it's wise to take careful advice about this. All of these points, I think, make it clear that you should certainly appoint the best lawyer you can afford. And it's vital you like and trust them and feel they're going to work proactively and be in your corner. One of the key things your lawyer will be negotiating as part of your divorce is how the assets of your marriage will be split between you. And the starting point for most divorces is that assets are split equally. But there are several factors that mean that's not always the case. And I asked Helen to explain more about that.
The different factors that make a settlement larger or smaller. Some people talk about the length of marriage or what both parties have contributed to the marriage. Are those still key factors?
The court has a fairly wide discretion to make the orders it considers fair and reasonable, but they are guided by the law, and the law sets out a range of factors that the court needs to take into consideration, and those include the length of the marriage, the parties' needs, and that's a very, very important consideration in a lot of cases, because usually, unless the couple has the luxury of having so much money that even dividing it equally leaves them with enough money to satisfy their needs, generally we have to look at whether there should be an adjustment to meet the needs of, say, the party who's got care of the children. In a longer marriage where there are children, it's fair to say that the starting point is going to be that the assets of the marriage are divided equally. And it tends to be that if we need to adjust the way that the assets are divided, the overriding reason for that is generally the needs of the economically weaker party. So typically, but not always, the mother who's got care of the children, who isn't earning as much, for instance, and they won't have such a big mortgage capacity, and therefore they may need more to rehouse themselves, and that would justify dividing the proceeds to sell the house unequally or giving them more of the assets. There are all sorts of other issues as well that we need to take into account, but one of those is not the behaviour of either of the spouses. Now, lots of people will come to us and think that the court will take this into account, that either they or their spouse have behaved in such a way that that's going to mean the court will give them less money. It's very, very rare indeed. In fact, it's part of the law that says that the court won't take into consideration the reasons for the breakdown of the marriage or the behaviour of the parties unless it's so very serious that they can't ignore it.
Very useful advice there from Helen. So to emphasise what she was saying, the assets of the marriage are divided according to the needs of both parties. In the main, what everyone's trying to achieve is for both people to have enough money to ensure them somewhere to live and a reasonable lifestyle. That share needs to be fair, but what both parties feel is fair can of course be very contentious. Certain factors are taken into account when making these difficult decisions, many of which are listed here. Not all assets are included in these considerations. If you're a beneficiary of a discretionary trust, that money is often not included. If you entered into a marriage agreement called a prenuptial or a postnuptial agreement, that might carve out certain assets that you acquired before or after the marriage started. A common misconception is that holding assets in one person's name and not in joint names will protect that asset on divorce, but that is rarely the case. Remember that family courts take all of the assets into account and have the power to move them from one party to another in order to get to a place where both people have a fair share. Your most valuable asset, aside from your house, could well be your pension. And we know that everything is considered when sharing assets between you, but pensions are complicated, not least because they generally come in two different shapes. Defined contribution pensions are those you see most commonly now, where you pay a regular amount into them, hence their name. They are often also called workplace, stakeholder, or personal pensions, but different companies use their own names, which can make things confusing. If your pension has an investment fund inside it, which goes up and down in value, it will probably be a defined contribution pension. The second key type is a defined benefit pension, also called a final salary pension. It's not especially common to be an active member of these pensions anymore, unless you work for a big company and joined several years ago, or if you work for the public sector in teaching, local government, the police force, and so on. These pensions provide a promised income when you retire, which is calculated based on your salary and the length of service. That income can be exchanged for a capital sum called a cash equivalent transfer value, which effectively allows you to convert the promised pension income into a defined contribution pot instead. When a pension sharing order is made, it can be possible for a spouse to join a defined benefit pension and to have their own guaranteed income from that pension scheme when they retire. There are actually many complexities of doing that, which I won't go into here. What's much more common for both types of pension is for the pots to be split and shared as a transfer value. One person keeps their share in that pension, while the other one transfers their share to a new pot, quite often with a different pension provider. If it's a defined benefit pension being shared like that, this pot must go to a new pension provider. And you may well be prompted to talk to a financial planner to make that happen, as you'll need to think about which pension plan is best for you for that money to go into and how that money should be invested. Of course, your lawyer will deal with most of this and will involve experts where necessary, but it's another thing to be calculated and negotiated. The more pensions you have, particularly if they're defined benefit pensions, the longer this will take and the more it will probably cost. Here's Helen again, explaining how pensions fit in.
With pensions, they can be complicated and it can be dangerous to get it wrong as well, because sometimes it's tempting to look at pensions, and if you've got a couple who have roughly similar pensions and they're happy just to walk away with their own pension assets, sometimes you need to do nothing more than to have a clean break order. But perhaps in a more typical case, you have one party who's got much more valuable pension assets, and you need to consider a pension sharing order. A pension sharing order is where a percentage value of someone's pension is given to the other party and placed in a pension pot of their own. So it becomes their own pension from the time of the pension sharing order. You don't wait until the retirement date, it goes then and there. So it sounds simple, but as you know, there are many, many different types of pension. Broadly speaking, there's the defined benefit and defined contribution pensions, and they operate very differently. Defined benefit pensions all have their own different rules, and some allow internal transfers so that you become a shadow member of the same scheme. Some insist on external transfers. The cash equivalent transfer values of the pensions are calculated in different ways. You have couples who have a big age difference between them, so one will be claiming their pension 10 years before the other one. All of those factors can make it very difficult to assess what's a fair and reasonable pension share.
So it's quite complicated, unfortunately. It would be easy to tot up the value of all your assets and just split them down the middle between you, but that can be quite dangerous. I want to give an example here. Let's look at a couple where, to make things easy, they have assets worth £1 million and are content to share them equally. Is this suggested split of assets fair? Olivia has the family home, Martin has the pensions. What if I told you that Martin was age 40 and couldn't access his pensions for at least another 15 years? Even if he wanted to, some of that money would be taxed when he takes it out. And he has a low-income job with little ability to get a mortgage. This share between them looks okay on paper, but it's not workable. Let's imagine another couple with circumstances that are more complex. They've come to their lawyers with this rough split that they've agreed between them. Both have £500,000 worth of assets. Mohammed has investments and rental properties that he can sell to raise money to buy a new home. Jasmine keeps the family home. She gets some pension money and she's got some cash. On the face of it, this feels quite fair and equal. They both have somewhere to live, other assets, but there's a real problem here that's making their situation very unequal indeed. Any ideas? It's tax. When the rental properties and investments are sold by Mohammed to raise the cash he needs to buy a house, he's going to have to pay capital gains tax on the profits that have been made since they were first bought. Let's say that tax is £25,000, which is quite possible. He is now £25,000 out of pocket compared to his ex, Jasmine. So are all assets equal? No, they are not. And in this case, it's because these assets will be taxed differently. This is just one example which shows the damage that capital gains tax can do. But you need to be aware of other taxes too, income tax and even inheritance tax, which can skew the share of assets between you. I'm going to introduce you now to Kari Mellon from Opes Tax. She explains why you need to be aware of any assets of the marriage that might have capital gains tax issues and gives another useful example.
So I am Kari Mellon, the owner and director of Opes Tax.
Kari, are there any capital gains tax issues that need to be considered when you are separating and divorcing?
Yes, potentially there are. If you have assets transferring between spouses, you need to be mindful of capital gains tax. And the date that you need to give the most importance to is the date of separation. So if you transfer assets in the year in the tax year that you separated, you can transfer assets with no capital gains tax implications. But if you transfer after the tax year of separation, that's a transfer at the open market value, and so it could result in capital gains tax charges.
People don't often think about that when they're considering separation.
No, they don't. And quite often the way we get involved is to look at all of the assets of a marriage and actually look at what would be the position if they were all turned to cash straight away, to identify the tax charges that are maybe built into assets. So you can see what is the net wealth of the couple that should be separated. Because quite often you will see assets passing between spouses, and if the tax is not quantified at the start, one party to the marriage might get a deal that they think on paper, that's great, I've got all these assets. But if they're going to sell those assets quite quickly and they face large tax charges, they might not walk away with what they thought they were going to walk away with.
So I suppose what you're saying is that during a divorce, all the assets get put on the table and it would be easy to think of them all being equal. But
yes,
actually when they're sold, they could be very different.
Yes, yeah, correctly. So let me give you an example. Let's say we have a husband and wife, and the wife owns, let's say maybe a share portfolio. It's owned in her sole name. She bought it for, say, £70,000 a number of years ago, and actually the value of the shares has increased and it's now worth £120,000. So on paper, she has a £50,000 profit. Now, if she decides that she wants to give that to her husband as part of the divorce settlement, she can transfer that to her husband in the tax year that they separate, and there's no tax charges. But what it means is the husband inherits the portfolio at his wife's original base cost of 70. So if the husband's thinking, actually, I'm going to go and sell it straight away, he's going to be subject to tax on that £50,000. which on a worst case scenario could be tax of almost £10,000. So rather than walking away with 120, he's only walking away with 110.
So how do you go about resolving that? Once you've identified that there might be taxes sort of sitting inside some of the assets, what's the best way of actually planning around that?
Well, sometimes, depending on the assets involved, there are some tax elections you can make. So, for example, if you have rental properties, and let's say you've got 2 rental properties that are both owned jointly, there is a tax election you can make that allows you to separate those properties so that the husband has one and the wife has the other. And this election allows you to mitigate some, maybe even all of the gains arising on that transfer. But that's only available when you have land and property. It's not available if you've got a share portfolio. So the real benefit of ascertaining the tax at the start allows then usually the parties that are working with the couple, the mediators and the solicitors, to have a better financial discussion because they have all of the facts on the table.
Really interesting stuff from Kari. So it's very important that both parties know that if there are assets where there could be capital gains tax, if they're going to be sold, that needs to be taken into account by their lawyers. We also know that the date of separation is important, and the transfer of assets between spouses as part of the settlement should ideally take place in that tax year, so there are no tax charges. If you put it off until a later tax year, capital gains tax is more likely to apply. We have seen that not all assets are equal when they're turned into cash, and that there's a big risk that one party will be out of pocket after the tax is paid. We also know that tax can sometimes be avoided, or at least reduced, with good planning. But tax planning must be done before you start sharing assets between you, which crystallises the tax position. Your solicitor may well bring this up, but not always. And certainly if you're going through mediation, you should go armed with information about how taxes might fit in for you, so you negotiate a fair split. Your lawyers will want to know the tax that would be due if you sold the assets, and indeed whether you intend to sell those assets shortly after the divorce. If you have any assets other than your home and pensions, I suggest taking advice at the start of your divorce process. This is likely to be from a tax advisor like Kari, particularly if your situation is complex. Your lawyer will be able to take you so far with this and to flag up when it's outside of their area of expertise, but it's always better to have done your research and be on the front foot. As you might expect, there are lots of other circumstances when taxes can apply, and there's too many to go into here. But it's worth highlighting that taxes can apply on your main home if you aren't careful, particularly if you transfer it to your spouse more than 9 months after separation. There are generous exemptions to minimise that happening, but you need a specialist to understand what they are and when they apply. Also, shares in a small business owned by one of you can incur tax if they're transferred between you. And of course, they cannot easily be sold to pay for that tax. So there's lots to think about. The impact of not taking taxes into account and perhaps not taking the right advice could be quite significant. Here's what Kari had to say about that.
The impact of getting it wrong and not taking that action could be quite significant financially at a time when, for most couples, really they want to get the best possible deal that's fair for both parties, and they don't particularly want to pay more in tax or even professional costs than is really necessary.
Yeah, completely agree. It's good advice to take at the start because, one, it may save you tax in the long run, and actually it may save you other costs. For example, it may save you having to go over all of the same discussions that you've already been having for the 6 months. So the peace of mind that the tax advice can give you, that actually you know the tax, you're happy with the deal that you've now negotiated, you can move forward, and there's nothing lurking in the back of your head or question marks or anything that might creep out later that you weren't aware of.
Now, although it's not a nice thought, it's important to think about what would happen if you die. Do you have a will? Does it leave everything to your ex? Kari explains why it's vital you get a new will as soon as you've separated, not just waiting until when you've divorced.
Why is the date that you divorce and receive your decree absolute important?
If you have a will, or if you don't and your estate passes under intestacy, your spouse is still your spouse until the day that you are actually divorced with the decree absolute. So let's say, for example, you've drawn up a will and you leave all of your estate to your wife. You then separate, and let's say you don't get divorced for maybe 2 years after. In that 2-year period, your wife is still your wife, and your wife could still inherit under your will. So if something were to happen to, in this example, the husband in those 2 years, his wife, but separated wife, would inherit his estate. So the wife or the husband, whoever it is, which parties and passing wealth, is only actually crossed out of the will once the divorce is finalised. So I would always say, if you have separated, look at your will as a matter of urgency, and just draft a very basic will in the meantime, but just to remove your former spouse from that, so that if anything were to happen to you, they don't inadvertently inherit from you.
So to recap, Kari has pointed out that the date you legally divorce and receive your decree absolute is important when it comes to what happens to your wealth when you die. Remember, you are still married, so if you haven't changed your will or you don't have one, your ex will stand to benefit. Another thing covered in your will, if you have younger children, is who you've chosen as a guardian to take care of them if you've gone. Take a look at who you chose. After a divorce, you may not want their guardian to be on your ex-partner's side of the family when both of you have died. So the action here is to set up a new will as soon as possible. It doesn't need to be complicated, but it does really need to be done professionally. You can always go back and refine it later on when your mind is clearer. Similarly, you should look to see what happens to your pensions when you die. They don't work in the same way as assets passing under your will. Most of the time, people will have told the pension companies to pay their pension out to each other if they die. Or if you've given no instructions at all, that's probably what will happen automatically most of the time. So put the record straight. Contact each pension provider and tell them you want to change what's called a pension death benefit nomination. Also, they call them an expression of wish. You may be able to do that on an online portal, or you may need to complete a form and send it in to them. Once your divorce is completed, you've received the consent order and assets have been transferred, a new chapter can really begin. It's normal that in most relationships there's a key person that takes care of the finances. When you've separated and divorced, you have to acknowledge that this is now your responsibility. You need to understand how your finances work, how your taxes work, what you have, and how to make it last. You have to become accustomed to the conversations that your partner previously had. When your divorce has been completed and the court order implemented, you will be in a new financial position. You might emerge with more wealth than you had before, or less. Either way, it's a good idea to understand exactly what you have, including money in the bank, investments, property, pensions, and so on. That information will put you in a powerful place to be able to make sound decisions going forward. Practically, that means collecting that information in a spreadsheet, perhaps, if that's possible. Or you might have an app you want to use. Even a notebook would be a good starting point. Regardless of whether you have a little or a lot, you will also need to know how much you're going to spend and have a good idea about where your income will come from. If you have any sort of complexity in your finances, you may well want to work with a financial planner to help develop a plan for your future and to answer your questions about the type of lifestyle you can afford to have. We'll come on to that shortly. You may well have some immediate requirements at this stage. If you've had to give up some assets as part of the settlement, there are some practical measures to take care of. Cancelling direct debits relating to a house you've just assigned to your ex-partner, for example. If you've received assets as part of the settlement, you'll need to know what to do with them. You'll need to take advice about where any pension share should go, for example, and how that money is invested. Particularly if your settlement and other assets are substantial, you'll want to appoint a financial planner to advise you. As a financial planner myself, I can tell you that we would be looking at making that money provide what you need. That might mean investing it for growth and protecting it from tax so far as possible. It may well mean setting up a regular monthly income so you have some structure. It might even mean helping you repay debts or legal fees. We'd be able to work out how best to do that with the money you have. Commonly, one of you will need to buy a new home to live in, so there will need to be a discussion about how much you can afford to spend on that new home, what mortgage you can secure, and so on. Finally, the receipt of a financial settlement could have an impact on any benefits you might have been receiving, so make sure you're aware of that. Whether you've gone through a divorce or not, and whether you've come out of this with more or less, a key and fundamental question is whether you have enough money to live the way you would like. Understanding what lifestyle is possible and what isn't is exactly where a holistic financial planner comes in. We're also called certified financial planners or lifestyle financial planners. We specialise in this area. In order to try and answer that very big question, we will first need to understand what your ideal lifestyle is. Now, that's not always clear, particularly as you emerge blinking and bruised from the divorce process. We help you think deeply about the person you want to be now, your ideal lifestyle, what you want to provide for others like your children, and the experiences you want to enjoy in the future. We aim to answer if there's enough to live comfortably, but to go beyond that, to find out how long you'll need to work, if at all, and how much you need to earn to live comfortably. I want to give you an example of what part of a financial plan can look like and the kinds of questions we can answer. Let me introduce you to Stella. She's 50 and she's just got divorced. She's got £350,000 in the bank as a settlement, along with some of her own money. She's also now got total pensions after a share from her ex of £400,000. The family home has been sold, and so she's renting currently. She earns £40,000 and was hoping to stop working at 60, but she doubts it's possible now. She's thought deeply about how she wants to live. She has always wanted to travel, but her ex just wasn't keen. So she wants to do some serious trips abroad now while she can, spending perhaps £8,000 a year. She also wants to buy a home for £400,000. Let's see what's possible.
So we're currently looking at a chart which shows Stella's spendable wealth for each year of her life. The timeline at the bottom shows her age between now and age 94. The other upright axis shows her liquid spendable wealth. Green is pension money and pink is cash. And you can see it growing over her lifetime, each column showing each year's worth of wealth. This particular forecast is based on Stella buying that house that she had her eye on, with a small mortgage, going on the holidays, and working until age 65. But this chart doesn't actually show her house value in any of these columns because she can't spend it unless she were to sell it and perhaps downsize later, which she doesn't want to do. This shows that her wealth is actually growing over her lifetime while she's working and then stays fairly steady throughout retirement. In short, she's got enough to do everything she had planned. So Stella then mentions that actually she would love to do one or two other big once-in-a-lifetime trips, if that were possible. In the next few years, she'd love to go on a safari. visit the Taj Mahal and visit some of the top golf courses worldwide. She thinks that might cost perhaps £10,000 a year to do it really well. And she'd like to give £50,000 to her son to help him buy a house. And if possible, she'd really like to retire sooner than 65, if she could. Through a series of simulations, we find out that she actually can't quite do all of that. This forecast shows that her wealth rapidly runs out if she does everything that she just listed, and if she stops working at 60 rather than 65. Her pension money's run out by the time she's 80. It's just not sustainable. But we look at some alternatives. We see that she could work full-time to 60 as planned, and then part-time between 60 and 65. That feels like a reasonable compromise, and it gives us a much better picture. There are other ways of achieving this same result too. She could spend less, she could buy a smaller home, and so on. Each one of the variables will change the shape of her plan. Knowing what's possible gives Stella the confidence to find a house in that budget, or perhaps a bit less if possible, and start planning her first trips away. She knows that if she gives up the trips or buys a more modest house, she can afford to retire sooner. But actually, she enjoys work and is happy continuing if it means that she can travel the world and have a more robust plan.
Hopefully, seeing Stella's fictitious forecast gives you an idea about what might be in your own plan. To help kickstart your thinking about your lifestyle, what's important to you and your main concerns, I want to suggest an exercise. It's something I've used with my clients for years, and I return to personally every few years as well. There are 3 simple questions as part of an exercise to help you think deeply about what's important to you before you start planning ahead. The first question of the 3 is on the screen now. Imagine that you're financially secure and have all the money you need for the rest of your life. How would you live your life? Would you change anything? What would you do? Now is not the time to try and answer this with any depth. All questions deserve proper thought and time. But you can download the full 3 questions from our website, and there's a link at the end of this presentation, which will be sent to you. There are a few practical and more technical things that come up after you've finalised your divorce. If you were having a professional financial plan put together for you, most of the points you're about to see would be covered in it, but you can do many of these actions yourself too, if you prefer. Now, you will probably be quite protective of any settlement that you receive, including a pension share, and rightly so. The role of your financial planner is to know how best to protect the wealth you have. That's true also if you've had to give away some of your money. Firstly, we need to protect your wealth from inflation. Your wealth will very likely be invested in some way in order to help it grow, particularly if you've received a settlement. That might be within a pension. You might have money existing in an ISA, for example. We will work out for you where everything should go. You don't have to do that, but when bank accounts pay almost no interest and inflation is generally 2 or 3% a year, it means that the spending power of your money will go down if you don't invest it. Then it needs to be protected from investment losses so far as necessary. You might feel comfortable with some volatility in investment returns in theory. I usually recommend a portfolio that's at the lower end risk of what's appropriate for you to start with. And then we can increase the level of risk you're taking, perhaps after a year or so, when you've found your feet and when you're thinking more clearly. It also needs protecting from tax through sensible and careful planning. All of your wealth does. We try to use investment wrappers which completely protect money from tax where possible, or at least defer the tax until later, allowing tax-free growth in the meantime. Tax is one of the greatest costs that you can have, and a good financial planner can help get that down. Minimising the cost of investing is also important. For most people, they should be looking at no more than 0.5% of their investment value being deducted in investment charges. I often get asked, what growth can I expect on my money? And the answer is always, it depends. If you take more risk, you can expect a higher return. Using well-diversified portfolios with very low costs helps a great deal, and minimising taxes helps too. There's a great deal of expertise involved, so it's always sensible to work with a professional financial planner if you can. If you've lost some pension as a result of the divorce settlement, planning might focus more on building that pension back up. If you'd been close to the lifetime allowance previously, you might find that you have a lot more headroom than before to pay money in, and it might even mean a change of strategy for you. Paying into a pension generally is attractive because of the tax relief that you get when you pay money in. It grows tax-free, and it's free of inheritance tax when you pass away too. Depending on your situation, you may need a regular income once your settlement's been received. If there are several assets, you might have the ability to choose where your income comes from. It might be a mixture of rental income, salary, dividends, and so on. Each one is taxed differently, and it's worth very carefully deciding which income you want to take, because some of it will be optional and adjustable. If you've had to give away assets, you'll find that your income may well reduce. You might stop receiving rental income, for example, or your pension income might go down. You will also need to do that same exercise to work out where your income should come from if you have the choice. You should almost certainly have a cash buffer, a pot of money for emergencies, treats, overspending, and so on. It's particularly important in the first few months as things start to settle into a routine. So we want to make sure your plan is resilient and can withstand a few changes here and there. Firstly, thinking about the most significant change of all, if you die. We've already emphasised the importance of updating your will, or indeed writing one for the first time as soon as you've separated. You might have life insurance in place, including death in service insurance through your work. That will also need to be updated to make sure it's paid to the right people. We would also want to test out whether that life insurance is sufficient now, or even necessary. That will depend on several factors, including whether you have a new partner in your life now and how old any children are. We need to think about what would happen if you were seriously ill. Also at this point, if you're relying on continuing to work for several years, like Stella in our example earlier, it's going to cause a real problem in your plan if you've got an illness that stops you from working. Sometimes that can be resolved by having plenty of cash available. Sometimes it's best addressed by having insurance. That's the kind of thing we can work out and organise for you. Finally, a lasting power of attorney is a mechanism which allows you to appoint someone to make decisions for you about your health and welfare or your finances if you're not capable of doing it yourself. If you had one of these in your ex-partner's favour right now, it's time to update it. If you don't have one at all, it's time to get it organised. Speak to your lawyer about doing that at the same time as updating your will. You might want to appoint another family member or even a child if they're old enough to be your attorney. So we're coming towards the end of the webinar shortly, and I just want to invite all of our contributors to offer a few last words. Here's Kari to start with.
I guess one other point to maybe highlight is that you do tend to see married couples will, if they're doing tax returns, they'll always use the same accountant. And typically one party to the marriage will lead on that. So they'll take care of providing the information to the accountant and agreeing any figures. And the other party to marriage might just sign a form at the end of the year. If you're in that situation, then think about getting your own accountant. earlier rather than later. So you can start to build your knowledge of what your own tax reporting obligations are, because HMRC will not accept that, you know, my wife or my husband used to do it for me. That's not a reasonable excuse in their eyes.
Thank you, Kari. And here are the last tips from Helen Shaw.
What's your best advice about how to get through a divorce as smoothly and as amicably as possible?
Well, find a good lawyer. Provide the information that you're expected to provide. There's no point in hiding anything. Be constructive, be civil, and be prepared to negotiate.
Wise words from Helen. And Nikki's last message here is to emphasise that a good lawyer won't just sit behind their desk preparing letters for you. They can do a bit more than you might first think to help you through this process.
The message I would like to come across is that family lawyers don't always have to be the one-dimensional thing that you might expect, because it's not just finances I deal with, it's everything. It's children, I'm a mediator, I do domestic abuse, injunctions, civil partnerships as well, all the different facets of family law. And I think what is massively important is trying to be really creative and not just thinking it's necessarily down to court. So I'd look at round table meetings or more mediation or other organisations and people that can help family and try and resolve it that way. And I'm really passionate about things like that.
And I want to give you a few last tips too. Firstly, keep the end in mind throughout the process. You will get there. Secondly, understand what you have financially. Really get to grips with what you have and what it can do for you. Thirdly, work with a professional financial planner so you can enjoy the best lifestyle possible given your new circumstances. A regular income, properly invested money, well-structured pensions and contingency plans will all give you reassurance that you're in control and can start this new chapter of your life positively. So there's some further resources here which might be helpful for you. And I really hope that's been a useful tour through some of the key points to consider if you're getting divorced, or perhaps if you're already starting a new life post-divorce. If you need any advice, you should get in touch with any of the professionals mentioned in this webinar, and of course any of the financial planners in my team too.